What's good, guys? Welcome back to another video. Today I'm going to break down the setup that we should be looking for on Bitcoin. I've got a couple of other forex setups as well that is worth considering. In fact, one of them is already kind of playing out, so yeah, definitely stick around. For now though, we're going to get right into talking about Bitcoin. And again, like, I'm going to sound like I'm already sounding like a broken record, but I will continue to sound like a broken record. But I feel like you guys should know this. As much as we hate to admit that, Bitcoin is in a bear market, and that as much as we hate to admit that our bags are going to go lower, but one thing that is undeniable, like one of the things that I've done well, and one of the things that I've publicly documented doing well, is that whenever we have a bullish trend, I'm always saying like, hey, it's bullish, buy high, sell higher. Meanwhile, people are calling for like, oh yeah, Bitcoin's already topped for this like ABC reason. But one of the other things that I have done in the many years that I've been recording videos daily like this, giving you guys the rundown on the markets, is that when the market is showing bearish signs, I am the first to call it out, and I am the first to tell you to acknowledge it objectively. And that is definitely what has happened. Now, if you look back at my videos from October and November of last year, you know that most of the thumbnails are like, hey man, sell. And right now, Bitcoin is in exactly same situation. Now, I'm not saying that Bitcoin is 100% guaranteed to go down from here. After all, we're in the financial markets. Nothing is a 100% guarantee. Now, but what I am saying is that based on my system and based on my rules for analysis, this is pointing bearish. Now, whether it plays out or not, I don't know, but it's good to at least talk about it. So right now, back then, we had a change in order flow with this line right here, followed by a retrace into a bearish further gap on the weekly chart, and then boom, that was when the big dump happened from 100K down to $65,000. That was the big liquidation event. Right now, we're still within that bearish order flow. In fact, now not only order flow is bearish, but like market structure is bearish as well on the weekly chart. Because even if I just kind of show you, okay, you have this low, this high, this low, this high, this low, this high, this low, and then now, like, take a look here. Major low has been broken. So not only is order flow bearish, market structure is bearish as well. And what happens, like, you really boil things back to the fundamentals. What do you expect when the market is in a bearish trend? That's right, to make lower lows. So until this bearish trend is broken, the correct thing to assume is that things are going to go lower. Not because I want it to happen, not because, like, for no reason other than the fact that this is kind of how market structure works. So I'm not telling you that it will go down. I'm just sharing, like, hey, based on objective rules of analysis here, chances are it's going to go down rather than up. Make sense? So anyways, like, do with this information what you may. Like, I'm not going to give any investment advice, of course. I'm not going to even tell you to sell all of your assets or whatever. But what I will do, at least for me, just personally, is I will be building some swing shorts at this level here, because I'm not even saying that this is going to 100% work out, but what I am saying is that you have got a pretty good risk to reward here, where in the event we kind of jump into a short here, our stop loss is at the most going to be here. And the potential target that we have to work with in this case is like at the very minimum over here. So that already gives us kind of like a 2-to-1. In fact, let me just put something onto the chart so that you guys can see this. So already, just targeting this low, it is already going to give us a 3.5 risk to reward ratio, which means for every dollar that we put on the line, we can stand the chance to make 3.5% back. And that is a risk to reward that I'm more than happy to take every single day. But what makes this better is two things. One, this is literally just me looking at the weekly chart, which means that I have the opportunity to find this entry way more into the 1 hourly chart, into the 15-minute chart, and 3.5 can become 5 or 10 real quick. Now, the second thing that makes this better is that when you are in a downtrend, you make lower lows, right? Not target a previous low, I mean lower low, right? That's kind of how markets work. If you are in a bullish trend, you make a higher high, which means it stands to reason that if you are going to continue this trend, which for now there are no signs that it's been broken yet, then you are going to make a low lower than this low that we're looking at right now. I know that's a lot of lows, which stands to reason then that the next logical area to go to is $50,000. So you put that into perspective, you're standing the chance to make 6R just on the weekly chart, potentially more if you go into the lower time frames. So that's what I'm saying, right? I'm not bearish on Bitcoin. If anything, like, I would love for crypto to bounce back, because I hold crypto and I am a big crypto bro. Heck, the name of this channel is The Art of Crypto. But one of the reasons why I haven't been talking about crypto as much over the last few, like, I would say 3 to 4 months, is because it's just not great. Like, it's just not a great market, at least not for now. But there will come a time when crypto is going to bounce back and we're going to go back into a bull market and everyone's going to be interested into crypto again. But for now, I still need to pay my bills. And to do that, I'm getting into Forex. Because every single day while Bitcoin is chopping around, and even when there is an opportunity on Bitcoin and you take it, it doesn't really play out the way that we are envisioning it for. It doesn't really play out the way that we're envisioning it to. And that's not the fault of the system that we're using. It's just Bitcoin right now is in a state where there's a lot of uncertainty. You have a lot of people calling for things to go down. You have a lot of people calling for things to go up. But either way, if you just take a look at the volatility, in fact, let me show you this right now. Like if we just take a look at, the historical volatility for Bitcoin, this is a chart of the average kind of like move on a daily basis, right? Which means that at this point here, which is back in February of 2026, right? The average daily move of the last 14 days was $5,000, which means on average, every single day from the high to the low of the daily candle, you're moving $5,000, right? That's a lot of volatility. It's more than enough for you to make a living with. Where the volatility is now compared to back then, or even just compare it to at any point on the chart, and you will see that we are basically at all-time low levels of volatility. Now, what does this mean for you as a trader? There is nothing much to take advantage of. Now, even when there is a setup, it's going to move $1,000. That is not a lot to work with. Now, I'm going to pull up a different chart. Gold. Arguably, the safe asset, right? Something that does not have much volatility. Look at this chart. You are, compared to every other year that comes before it, this is very nice volatility, right? It's moving on average 100 points a day. And that is something that you can make money with. That is the reason why I've been talking about Forex a lot more. Not because crypto is dead or whatever, it kind of is. But as a trader, you make money as long as there's a good setup that you can take following your system. And you make money as long as there's volatility. You don't need the market to go up to make money, right? Up or down, as long as there's movement. That's how you make money. So anyways, with that spiel out of the way, I haven't done one of these in a long time. Let's get into, finally, the Bitcoin setup of the day. And then we're going to get into, ironically, the gold setup of the day, because it's looking pretty decent. So anyways, let's dive right into it with, let me just remove ATR chart and kaboo. So Bitcoin, you are having a bullish daily bias. Does not mean that we should be going for long though. Well, in fact, let me just remove this because we are not going to use that. So just because you have a bullish candle close on Bitcoin does not mean that we are going to go for a long on Bitcoin, because fundamentally speaking, you are anticipating some sort of order flow is already bearish and you are anticipating some sort of a dump from this point onwards. Doesn't mean that we're necessarily going to go short as well. Because the way that you want to kind of navigate situations like this is that, okay, everything is lining up in the higher time frame for some sort of a big down move. So what happens when you are printing buy signals? Well, the simple answer is ignore it. Like, it's going to be so much easier for you to trade if you just get a daily, bearish close. And boom, right? You short, and it's chances are those candles are going to look like that. Meanwhile, your up candles are going to look really tiny in comparison. But still, we won't know until we go into the lower time frames in order to find out. But what I just shared is not popular advice. Nobody likes to hear that, hey, don't trade today, because everyone wants to take a trade every single day. But the truth is, not every day is a trading day. Or when you have an asset that is not printing like a clear kind of like trade signal, what's the solution? Go to something else. You have tens, if not hundreds of opportunities that day, or just in terms of assets that you can look at. Why not just go scan through them, see if there's anything that aligns with the system, and then boom, if you take that, guess what? You have a higher chance of making money. But anyways, just to get into the lower time frames, I can see that, for the most part, order flow is bullish. So you know what? I may even if I had to take a trade on Bitcoin, I'd probably be looking for a long today. Now, am I going to take a Bitcoin trade today though? It depends. Now, what I would like to see personally is, all right, first of all, order flow is already bearish. Second of all, I don't want price to go any lower than this point, because in the event that you kind of come all the way here and then you start, pussyfooting around, and basically what this is going to leave behind is you're going to have relatively equal lows. Now, with relatively equal lows, it's very normal for price to sweep this out for taking off. In fact, I was a victim of, this exact setup yesterday, where on Euro, I remember I saw a few relatively equal highs. Like if you take a look here, right, there's 1, 2, and 3 relatively equal highs. Regardless though, we had bearish order flow over there, right? That was the CISD. And so I just decided, you know what, probably because of news or for whatever reason, the relatively equal highs were not going to get swept. Guess what? Swept the lows, swept the highs, and then eventually chopped around for the rest of the day. So yeah, don't look down at relatively equal highs. They, it may always seem tempting for you to jump into a trade. If, for example, when the relatively equal lows are confirmed, it's always going to be tempting for you to especially if prices start going up, yeah, let me just get into it. But yeah, guess what? You're going to get stopped out, and then price is going to pump. So if you've been, a victim of this type of move one too many times, then that's probably why. So anyways, if price continues to go lower though, I'm still not going to be looking for a short. Why? Because the daily bias is bullish, right? I would much prefer to jump into a short once we get a confirmed daily candle close, because here's what you need to understand as well about trading. It's not about the number of trades that you take. It's about the quality of the trades that you take. Like, I know this has been regurgitated like many times, but the truth is, like, for example, I've won a lot of trades on Bitcoin. Just last year, I called 165 total trades on Bitcoin. I won 130 of them, and I lost 35 of them, right? That's a win rate of about 80%. I don't get there by focusing on, like, just taking every single Bitcoin trade that comes my way. I get there by being selective about the days that I do decide to trade Bitcoin. And when I do trade, when I do actually trade, I wait for the confirmations that I need before I jump in. And just on a side note, right? This is just a shameless pitch, but if you would like to work with me in order to build that system for you, or just to copy my system and apply it to your own trading, now, I'm not saying you're going to get an 80% win rate, but it will help you on your journey to becoming consistent with trading. If you like that for yourself, click the first link in the description box below and feel free to book a call. No pressure though, if you're not interested. Now, just to break down the Bitcoin setup a little bit more. Again, you don't want to see a candle close underneath this. If that happens, then yeah, this is invalidated, which leads me on to this black line that I drew here at $78,000. In the event that, you end up going lower, then what I really want to see before I even jump into, or even think about jumping into any sort of a long, is I want a 1 hourly candle close above this level. Once it happens, kaboom, kaboom, kaboom. And that is going to be what you look for. Now, chances are, based on how price action is playing out so far, I don't think it's going to happen, which leads me on to gold. Now, in terms of gold, you have a bullish steady bias over here. Secondly, you have on the 1 hourly confirmed bullish order flow. You had a CISD over here. Thirdly, you have a 1 hourly fair value gap that London has come into, and this is all the while sweeping the Asia lows. Let me just open up that kills in indicator so that you can see where the Asia lows are. Asia lows right here, and so far you're getting a bullish change in state of delivery. So the odds are, and I'm also not saying that this is 100% guaranteed to play out, it's just that this is the bread and butter setup that I look for. This is the typical A+ setup for me. Every time I take this over the long run, right, across many hundreds of trades, this is the setup that makes me, statistically speaking, some of the most amount of money in all of my trades. So whenever I do see this setup, yeah, of course I'm going to take it, because it doesn't matter if I lose this trade, but statistically speaking, long term, this makes me money. So I'm essentially playing into a bullish steady bias, London sweeping the Asia lows into some sort of hourly PDRA, followed by a change in state of delivery, and kaboom, and this is going to take advantage of a accumulation, manipulation, distribution setup. So that is going to be trade number 1. That is the one that I'm looking at for today. The second one is going to be on NASDAQ. On NASDAQ, you have a bullish steady bias. Secondly, you had a candle close above this level, which validates this blue box here as a potential bullish order block. And so far, it's holding pretty strong. Now, by the time you watch this video, chances are you're going to close above this level right here. In fact, you do want to look for this candle close above this level at 29,420. Once you get a hourly candle close above this level, this will validate this as a potential bullish order block, and you're going to wait for a retrace, and you're going to go for a long, targeting for 2R, because I can't give you targets when, NASDAQ is quite literally at all-time highs. But hey, if you do decide to take this, let's kind of frame the trade properly, and kaboom, right? This will still give you 1.7. Now, if we cheekily move the stop slightly higher, yeah, this will be, confirmed as a 2R trade, which is the minimum of what we want to go for when it comes to selecting for our trades. Now, the third one is going to be right here on oil. Now, oil is also pretty interesting because you have a very strong, bearish candle close yesterday, which means that we're going to be looking for shorts today. Now, one of the things that I did not want to, one of the mistakes that I did not want to repeat from yesterday is that even though during the London session today, I had an opportunity to go short. Well, to be honest, little did I know that it would have already done this much, prior to the New York session, but I was genuinely waiting for this high to get taken out because, well, you have relatively equal highs. So for now, I'm going to say that this is a valid setup, but a little bit less good compared to gold and NASDAQ. For me, I only take 2 trades for the day most of the time. So for me personally, I'm going to be focusing on gold and NASDAQ. But I don't know how this is going to develop. But if you are interested in oil, then a retracement back into this order block right here would give you an opportunity to go for a 2R trade down below. And as usual, I'll be calling any of the trade updates that I do make on Twitter. Although today I'm going to have a live trading call with my students. So I may or may not be able to be as active on X as I would like to. But either way, slightly different format for this video today. And if you enjoyed the format, drop a comment down below. But otherwise, I'll see you guys later or tomorrow. Ciao, ciao.